Hello everyone, good morning and welcome to today's lecture. So today we are going to start SA 500 series. Again, I'll reiterate that how we are going this time. This time what we are doing is we are going practically for the topics. Instead of discussing the theory, we will be discussing the questions as much as we can during the lecture. And for that, I need that you guys should watch the lectures before start of this class. You should read the study material for whatever topic it is and come up with your questions, so that when we are discussing anything in the class, when we are discussing any question in the class, you will be able to answer it or either at least participate with in the discussions. Okay, by that way it will be more helpful to you, it will be more beneficial to you. You will be able to understand the concept, you will be able to understand how the things are being discussed and how the question is being answered. So that is something, the objective of this class is. Okay, so before I start SA 500 series, I will be covering SA 500, 501, 505, 510 up to 580. There are two sessions for SA 500 series. I will be bifurcating between both of them. Before I start, I will just provide a brief background about these essays. Okay, so when I talk about SA 500, SA 500 talks about audit evidence. Okay, when I talk about audit evidence, SA 500 guides with respect to the requirement for the auditor. Okay, and with respect to the objective of the auditor to design and perform audit procedures in such a way that auditors should get the sufficient and appropriate audit evidence to draw reasonable assurance, from that particular audit procedures. And for that, when we are using any information as an audit evidence, there are some guidelines given, like we are required to evaluate the competency, capability, and objectivity of the expert. If there is an expert hired by the management, we are required to consider the relevance and the reliability of the information that we are using. We are required to get the understanding of the work, either it is performed by the management or expert. In case of it is, an expert is being appointed by the management, then we need to see the appropriateness of the expert's work. We need to get the information about the accuracy and completeness. We need to get the information about whether the information or the data which is there is suitable for the purpose of the auditor's purpose. Okay, we need to design and test the controls in such a way that we get sufficient and appropriate audit evidence. And if we have any doubt regarding the audit evidence, then the standard says that we need to gather other audit evidence, or we need to corroborate from other audit sources or with the other information that we have. And by this way, we can either remove the doubt or either we can, decide whether we want to rely upon a particular piece of observed information or not. So that was some background about SA 500. Okay. Now, let's start the questions, and then gradually I will be giving the background for other essays also. So there is one question: whether standards on auditing are applicable to only companies, or it is applicable to charitable trust or partnership firms. See, standards on auditing are not applicable to companies or charitable trust or partnership firms. It is applicable to the audit of those entities. Okay, so it is not directly applicable to entity, but it is applicable to audit, statutory audit being performed. Now, if you are performing a statutory audit, okay, of companies or partnership firm or trust, then it will be applicable. Okay, let's start with the first question for today. Okay. Mr. Jagannath, audit executive, was assigned to the audit of SecurePay Private Limited, fintech firm. The firm was involved in refinancing of accounts payable of other companies. Means what the firm was doing is, firm was refinancing the account payable. So the firm was paying the amount to the company for the accounts payable as a loan, and later on when the company used to pay to the accounts payable. To test for the understatement in the existence and valuation of account payable refinanced, Mr. Jagannath decided to test the recorded and refinanced account payables. Okay, sort of a loan. So when I say refinance account payable, it's sort of a loan to pay their accounts payable. And to test that, what the audited executive did is, he to test the understatement in the existence and valuation of accounts payable refinanced, Mr. Jagannath decided to test recorded and refinanced account payable, verifying the refinance account payable against the contract. Okay, against the contract. Mr. Jagannath did not identify any observation, and accordingly he communicated the same to his audit partner. While reviewing the work papers of Mr. Jagannath, audit partner identified that the audit procedures followed to test the understatement in existence and valuation of account payable refinanced is not relevant. However, Mr. Jagannath was not able to understand the comments provided by his audit partner. Kindly guide Mr. Jagannath with respect to the relevance of the audit procedure by selecting the appropriate option from below. So, there was a refinancing of accounts payable of other companies. Okay, sort of giving a loan. Now, to test understatement in existence and valuation of account payable refinanced. So, what Mr. Jagannath did is decided to test recorded and refinanced account payable, that is, verifying refinanced account payable against the contract. Now, Mr. Jagannath did not identify any observation. However, audit partner was of the view that the audit procedures followed to test the understatement in the existence and valuation of account payable is not relevant. Now, you need to guide why it is not relevant, or whether it is relevant or not relevant. If not, then what should be the procedure? So, why audit partner is not satisfied, or it's saying it's not relevant? What is the reason behind that? Come on, guys. What is the reason behind of the comment by the audit partner that it is not relevant? So this company was engaged in giving loan for the accounts payable to other companies. Now, when the audit team wanted to test the existence and valuation of accounts payable with respect to understatement in that, they tested the recorded accounts payable, refinanced basically, and they verified the refinanced accounts payable against the contract. Now, partner is saying this is not relevant. Why? Okay, good, Janvi. Come on, guys. I'm waiting for the answer. Why this procedure is not relevant in the current scenario? You need to apply some basics from SA 315 also. Trust me. If you want to understand this question fully, you need to apply some basics from SA 315. Why this procedure is not relevant? Why this procedure is not relevant? That's very important to understand. Okay, tell me, by testing the recorded accounts, recorded and refinance accounts payable, that is verifying the refinance account payable with against the contract, against which assertions I will be getting the comfort. So if I want to test, the refinance accounts payable against the contract that those are signed, okay, so against which assertion I will get the comfort. Okay, one is correct, Janvi, another one is not. See, if I'm testing the accounts payable refinance, it's a loan. Okay, if I'm testing a loan given against the contract signed, okay, so in that case, I will be having comfort on two assertions. Number one, existence. Number two, accuracy. But there will be no comfort on completeness. Because what I'm doing is I am looking the refinanced account, recorded refinance account payable. Again, I will emphasize the word recorded. I'm looking to the recorded ones. And if I want to test understatement, I need to see whether they are complete or not. So to test understatement, I need to ensure the completeness of the accounts, refinancing of the accounts payable. Okay. So to ensure the understatement is not there, sorry, I have written understatement. Is not there. I need to have comfort over the completeness accuracy assertion. Now, if I'm testing something which is already recorded, then how I will get comfort on the completeness assertion? That is not possible. Hence, this particular testing is not relevant to give me comfort on the completeness assertion. This testing might be relevant to give me comfort on the existence and accuracy. Okay. Or someone could say, yeah, valuation of the existing accounts payable refinancing agreements, but it will not give me comfort on completeness. Hence, it is not relevant to identify the understatement in the existence and valuation. So let us see the options. Now it will be easy for you to select the options. So these are our options. Number one, relevance deals with the logical connection or bearing upon the purpose of the audit procedure, and where appropriate, the assertions under consideration. In the current case, testing accounts payable will give comfort on existence and valuation, but not on completeness assertion. Okay, this was option one. Option two, relevance deals with the logical connection with or bearing upon the purpose and audit procedure, where appropriate, the assertions under consideration. In the current case, testing account payable will give comfort on completeness and valuation, but not on existence. The relevance of the information to be used as audit evidence, and therefore of the audit evidence itself, is influenced by a source and its nature, and the circumstances under which it is obtained, including the control over its preparation and maintenance where relevant. The relevance of the audit evidence is increased when it is obtained from independent source outside the entity. So what is the correct option? Now it is pretty easy to select because we discussed the answer just now. Good morning, Viraj. Good morning, Namrata. Come on, guys. What should be the option now? Now we just now discuss the answer. It should be easy to select the option. Come on, guys. What should be the correct option here? Okay, Janvi. I'm waiting for further answers. Yes, Janvi, it could be, but we need to select the appropriate one which is relevant to the question. So, see what we discussed just now, that if we want to get the comfort on the understatement, we need to get the comfort on completeness. However, the current testing gives only comfort on existence and accuracy, or you put the valuation. In that case, if I'm not getting the comfort on the completeness, I cannot say that my testing is relevant to test the understatement in the existence of the refinanced accounts payable. Hence, my first option itself talks about this, that in the current case, testing accounts payable will give comfort on the existence and valuation, but not on the completeness assertions. Hence, option 1 will be the correct one. Clear? Option 2, 3 are not. This is the definition of reliability. It is talking about the reliability of the information, not the relevance. This is something talks about that, okay, accounts payable will give comfort on completeness. Testing of, refinance accounts payable will give comfort on completeness, but that is wrong, not correct, incorrect. Okay, hence A is correct. Now someone will say, why not D? Because D talks about independent source outside the entity, but what we are talking about? We are talking about understatement. We are talking about getting the comfort and relevance of the what you say, like the information or the evidence we have got. When you talk about evidence, audit evidence that is which is obtained from outside, it increases its reliability, not the relevance. Let's say, for example, I get a confirmation. Okay, so there's a difference between reliability and relevance. I get an external confirmation. Okay, can I use that external confirmation to like I have received the external confirmation from data? Can I use that external confirmation for verifying the fixed assets? Answer is no. It doesn't matter that I have received that external confirmation from outside, from third party. It will not increase its relevance. Rather, again, it will increase its reliability. So he talks about reliability. It should not be relevance. If I get a confirmation from outside, it will increase its reliability. Okay, I can rely it because it's from third party, not the relevance. Relevance means the logical connection, with the purpose of audit of that particular information or evidence. So the current testing, what answer says that in the current testing, accounts payable will give comfort on existence and valuation, but not on the completeness assertions. Because what I'm doing is, I am testing the recorded loans agreement, refinancing agreement. I am testing the recorded refinanced agreement. So this will not give me comfort on the completeness because they are already recorded. How will I identify the items which are not recorded in the system? That will give me the completeness. Any further doubt? Any doubt? Is it clear, Janvi? Any doubt? Okay. If no doubts, then let me move forward to the next question. Mr. Sushil, while performing the audit of Hopes Private Limited, decided to appoint an auditor expert for the actual calculation of liabilities associated with the insurance contract or employee benefits plan. Hopes Private Limited appointed Mr. Anand for the engagement in the actuarial calculation of liabilities associated with insurance or employee benefits. Mr. Anand's calculations were accepted by the management and were incorporated in the financial statement. Now, Mr. Sushil also appointed Mr. Anand. So, management also appointed Mr. Anand. Mr. Sushil also appointed Mr. Anand. Same expert who was an expert in the actuarial calculations, knowing that he was also appointed by the management. As Mr. Anand was appointed subsequently to the completion of his contract with Hopes Private Limited, but for the same financial year. Mr. Sushil was of the opinion that Mr. Anand now will be auditor's expert, not the management expert, as his contract with the company is over. So what they are saying is they have appointed him subsequent to the completion of his contract with Hopes Private Limited. So Mr. Anand, Mr. Sushil, who is the audit manager or performing the audit, he is saying that that Mr. Anand now will be auditor's expert, not management expert, as his contract is over with the company. Mr. Sushil was of the view that he is no longer a management expert, and hence Mr. Sushil is not required to comply with the requirements of engagement and quality control standards with respect to management expert. Kindly guide Mr. Sushil with respect to the appointment of Mr. Anand as an auditor's expert. So Mr. Sushil is of the view that now he is no longer to comply with the requirements of management expert in case of the work performed by Mr. Anand. So we need to guide Mr. Sushil what is the correct option. Come on, guys. So what do you think? Auditor expert, management expert, both are same, Mr. Anand, for actuarial valuations of employee benefit valuations. Now, Mr. Sushil has appointed Mr. Anand after he completed his contract with the management. After he completed his contract with the management. So, can we term or can we say that Mr. Anand is now auditor's expert, not management expert, because his contract with the management is over, or not? So there are two essays into the picture. Which are those? Which are those essays? Which are those essays that are applicable in this question? Okay, Janvi, and why so? Why it is so? I want the reason for the answer also. Okay, good, good. I'm waiting for other answers also. Come on, guys, let's try this one. Can Mr. Anand be considered as an auditor expert or not? Can I consider Mr. Anand an auditor expert or not? Very important to understand. So can I consider Mr. Anand as an auditor expert? See, here the contract is over. Contract with the management is over, but the contract was the same for the same financial year. And if yes, then why? If no, then why? I want with reason. Come on, guys. So see, here there are two essays which are very important. Okay. One, my essay 620, okay, which is using the work of an auditor's expert, plus my essay 500. Now, my essay 600 talks about who is an auditor expert, but there is an exception given. When you read the essay, in second paragraph itself, it says that this essay does not deal with the auditor's use of the work of an individual or organization possessing expertise in the field other than accounting or auditing, whose work in that field is used by the entity to assist the entity in preparing the financial statement. So, SA 600 specifically talks about using the work, not the contract or existing relationship. Okay. So, SA 600, 620 says that if auditor is using the work, okay, using the work of an individual whose work in that field particular field is used by the entity. Okay, in preparing financial statement. Okay, then in that case, this essay will not be applicable. So you can say not applicable when this is the scenario. In that case, what is applicable? We are required to refer essay 500. Okay, now essay 500 talks about my management expert. So basically, if you read the wordings of both of the essays, 500 plus 620, they talk about using the work. It's not about the relationship or contract, or it's not about the existing with whom the person is working. It's about which work or work performed by whom we are using. And if we are using a work performed by a person whose work is also used by the management in the preparation of the financial statement, same financial statement, then I will by default consider him management expert. I don't have an option to consider him auditor expert. Now, there is one more reason I shouldn't be appointing Mr. Anand. One more reason why I shouldn't be appointing Mr. Anand, which is not S620 or 500, but something somewhere in the fundamental principles. Something with respect to the fundamental principles. What is that? What is the reason that I cannot appoint Mr. Anand as an auditor's expert? Something there in the fundamental principles. Come on, guys. What is that particularly because of which I cannot appoint Mr. Anand as my auditor's expert? Come on, guys. Absolutely correct, Janvi. Absolutely correct. Good, Viraj. Just to clarify, Sushil is audit team and Anand is expert. Okay. So I have received one answer only. what is the thing in fundamental principle that stops me from appointing Mr. Anand as an auditor's expert? So that is called self-review threat. There will be a self-review thread that the person whom I have appointed will reviewing his own work. Hence, I cannot mitigate this threat to the acceptable low level even by applying appropriate safeguard. If I appoint the same person, hence I cannot appoint Mr. Anand as an expert. Clear? Correct, Namrata. Okay, now let us see the options and quickly select one option. Option number 1. SA 500 does not deal with the auditor's use of work of an individual or organization possessing expertise in the field other than accounting or auditing, whose work in that field is used by entity to assist the entity in preparing the financial statement, which is dealt in SA 600. Hence, Mr. Sushil is correct. The auditor has a sole responsibility for the audit opinion expressed, and that responsibility is not reduced by the auditor's use of work of auditor's expert. Hence, it does not matter whether Mr. Anand is appointed as an auditor expert and Mr. Sushil is correct. SA 600 does not deal with the auditor's use of work of an individual or organization possessing expertise in the field other than accounting or auditing, whose work in that field is used by the entity to assist the entity in preparing the financial statement, which is dealt in SA 500, and hence Mr. Sushil is incorrect. And last one, if the auditor using work of an auditor's expert have followed SA 600 concludes that the work of that expert is adequate for the purpose of audit purpose, then the auditor may accept that expert's finding or conclusion, irrespective of the fact that the expert was also a management expert. Select one option from this. I'm making it a bit small so that you can see the option A also. Okay. Select one option from this. Correct, Janvi. Correct, Namrata. Come on, guys. Select one appropriate option. Just now we discussed the answer. It's pretty clear which option to select. I received 2 answers till now. I'm waiting for other answers also. I'm waiting for other answers also. What should be the correct option based on the discussions? So the correct option in this case should be option C. Reason because we just now discussed that Mr. Sushil is incorrect. I cannot appoint Anand as an auditor expert because his work is already being used. Okay, whose work in that field is already being used to assist the entity in preparing financial statement, which is dealt by as a FINET, that is management expert. Hence, option C is correct, not D, not B, and not A. Clear? Any doubt? Any doubt? Okay. If clear with the question, let's move on to the next one. Now, let's say, for example, in continuation of the above example, okay, let's assume that Mr. Sushil did not hire Mr. Anand as an auditor expert, but rather decided to review his work as a management expert. Now, let's say, he decided, okay, I'll not hire him. I'll review his work as a management expert only for the actuarial valuations. Then kindly guide Mr. Anand with respect to the requirement pertaining to the information to be used as audit evidence, okay, being prepared using the work of management expert. Now, what you need to do is you need to guide Mr. Anand what are the requirements when we are using information that is prepared by management expert as an evidence. So if I want to rely something which is done by management expert, then what I need to do? Simple. What I need to do? How can I accept that information? Okay. If that information is prepared by management expert, what should I do to accept that? Come on, guys. We'll come on the second part after this, but first part. So if I want to use work performed by Mr. Anand as an audit evidence, I want to use that information as an audit evidence. But there is something first I need to do. What are those things or testing procedures that I need to carry on to accept or to what I can say use the information and the work done by Mr. Anand as an audit evidence? What are those things? Come on, guys. You will directly use the work of management expert? Will you perform any procedures or not? Or you will just directly use the work of management expert? Okay, management has, Mr. Anand has calculated, let's say, for example, actuarial valuations for the employee benefit liability, like rupees 25 lakhs, I accepted that, okay, 25 lakhs. And I said, okay, it's fine because it's done by management expert. Or will I check something? Absolutely correct, Namrata. Absolutely correct, Janvi. Very good. Let us see what we are required to do. When we need to use information, okay, as audit evidence, which is being prepared using the work of management expert. the auditor shall, to the extent necessary, having regard to the significance of expert work for the audit purpose, evaluate the competency, capability, and objectivity of that expert, that is CCO. I usually say CCO, you need to do CCO check. That is competency, capability, and objectivity check. Then you need to obtain understanding of the work of that expert, what he has performed, how he has performed. You need to evaluate the appropriateness of the expert's work as an audit evidence for the relevant assertion. Again, very important. I need to establish relevance. So let's say, for example, he has performed actuarial valuation. I can use his work to look for valuation assertion. Okay, I can do that. But if I want to make sure that I want a comfort on completeness of all the actuarial all the employee benefit liabilities, or if I want to, let's say for example, I want comfort that all the employees which are on the payroll register are genuine. They are not a ghost employees or fraud. Okay, so I want a comfort that I want a comfort on existence of employees on payroll register. Can I get that comfort from actuarial valuation of employee benefits? Can I get that comfort from the actuarial valuation of employee benefits performed by expert? Simple as that. Can I? Answer is no, I can't. Reason because I want comfort on existence, but the actuarial valuation gives me comfort on valuation assertion. Again, 315, we are talking about assertions. I want completeness, I want existence, but I'm getting comfort on valuation. Both are different. It's not relevant. The testing procedure or the information on which I'm relying, it's not relevant for the purpose for which I need. Okay. Hence, I could say that, this is not a relevant information for me. I need to look somewhere else. In same way, I need to understand and evaluate the appropriateness of the expert's work as an audit evidence for the relevant assertion. I need to understand and establish the relevance for which purpose the information I require, basically. Clear? This is something I need to do before I accept, okay, information to be used as an audit evidence when it is prepared using the work of management expert. So usually I say that, okay, competence, capability, objectivity, understanding of the work, evaluate, relevance or relevant assertion. Okay, so if you remember this thing, you will understand that, like CCO, understanding, relevance. Now, second question to this second part of this question. Also kindly guide Mr. Sushil with respect to the matters which can impact nature, timing and extent of the audit procedures in relation to the information to be used as audit evidence being prepared using the work of management expert. Means, what are the areas which can impact the nature, timing and extent of audit procedures in relation to the information that is, that will be used as an audit evidence and being prepared by the work of management expert. So you are required to provide, like some areas with respect to the information, okay, or management expert, which can change my nature, timing, and extent of audit procedures. So I know these are certain, competency, capability, objectivity, understanding of the work, but I want specific examples of the matters, specific examples. These are the categories. Okay, I need to check competency, but specific examples which can, impact the audit procedures that I need to perform. And trust me, your examples will be linked to these three only. So it will be linked to these three items. For example, the relevant risk assessment in the risk in this particular area. So when I was talking about relevance, okay, I am also talking about risk assessment. So what is the risk in that area? Whether fraud risk is present. Okay. Now this is one example, okay, of the matter which can impact the nature, timing, and extent. How? Let's say, for example, if this is a high risk area with a fraud risk, significant risk, in that case, what will happen is I need to perform some additional procedure to gather more audit evidence. I cannot directly accept management's experts' work. I may need to, get more things. Good, Janvi. Good. So this was one of the area. I want you to answer other areas also that you think could impact the nature, timing, and extent of audit procedure. Don't copy this from someone somewhere else. Just think of yourself that how matters can impact. I have received one answer. That is already good. Correct. Correct, Namrata. Come on, guys. Waiting for further answers. Come on, guys. Okay. Let us see. So These are certain examples which could impact the nature, timing, and extent of the audit procedures. That is, the nature and complexity of the matter to which the management expert refers to, the risk of material misstatement in the matter, availability of the alternate source of audit evidence, okay, nature, scope, and objective of management's work, whether management expert is employed by the entity or is a party engaged to provide relevant services, extent to which management can exercise control or influence over the work performed by the management, whether the management expert is subject to technical and performance standards or professional standards or industry requirements, nature and extent of any controls within the entity over management work. Okay, then the auditor's knowledge and experience of the management expertise or field of expertise, the auditor's previous experience of the work of that expert. So these are certain matters which will impact the, you could say, nature, timing, and extent. Okay, in relation to the information to be used as an audit evidence, being prepared by the manager expert. Clear? Any doubt? Any doubt with respect to this? No? Okay. Very good question. I'll just a minute. Yeah. Okay. So let us see one more question. Mr. Charan, while performing the audit of Red Rock and Silver Sand Limited, who was involved in phosphorus mining, decided to appoint an auditor's expert for the valuation of environmental liabilities and site cleanup cost. Red Rock and Silver Sand reappointed Mr. Sunil, okay, for this engagement as an independent expert. For the last 5 years, management has been reappointing Mr. Sunil. Mr. Sunil calculated the environmental liabilities pertaining to completed mining sites and the sites which will be discarded in the near future and a provision for the cleanup cost. This provision was accepted by the management. Mr. Charan, after performing the inquiries with the management, was of the opinion that the objectivity of the independent expert cannot be questioned just because he was appointed by the management as their expert. Hence, there is no need to raise a question on the objectivity of Mr. Sunil or on the work performed by on his work performed for the company. Okay, so Red Rock and Silver Sand reappointed Mr. Sunil for this engagement. For the last 5 years, management has been reappointing Mr. Sunil. Mr. Sunil calculated, cost regarding the site cleanup and provisions with respect to that, and the provision was accepted by the management. Now, Mr. Charan is audit team member. Okay, Mr. Charan, after performing inquiries with management, was of the opinion that the objectivity of the independent expert cannot be questioned just because he was appointed by management as their expert. Okay. Now, in the current case, however, the audit partner was of the opinion that the audit team needs to evaluate the objectivity of the expert engaged by the entity, irrespective of the fact that he was appointed as an independent expert. Kindly guide the audit partner and Mr. Charan with respect to the requirement pertaining to evaluating the objectivity of management expert. Okay. So audit partner is saying, no, you need to evaluate the objectivity, okay, irrespective of the fact that he was appointed as an independent expert. Now, you tell me whether the audit team is required to evaluate the objectivity when the person was appointed as an independent expert. by the management. That should be actually management expert. By mistake, it's auditors. But you tell me in the current scenario, okay, can can the audit whether the audit team is required to evaluate the objectivity of an expert engaged by the entity or not? The fact is that he was appointed as an independent expert. Come on, guys. Can Are we required to evaluate the objectivity? Correct, Janvi. Correct, Namrata. Absolutely correct. Okay. See, just now we saw in one of the previous example question that we are required to evaluate competency, capability, and objectivity of that expert if he is using the work. Now, here it is not written that it should not be independent expert or something like that. Or we did not discuss anything with respect to the independent expert. We discussed either it's an auditor's expert or it's the management expert. The requirements with respect to the auditor's expert will be dealt under SA 620. Over there also we look for the objectivity. So by default, irrespective of the status of the expert, we will look into the objectivity. Now let us see the answer. As per SA 500 audit evidence, when the information to be used at audit evidence has been prepared using the work of management expert, the auditor shall, to the extent necessary, have regard to the significance of expert work for the auditor's purpose and evaluate the completeness, competency, capability, and objectivity of the expert. Now, a broad range of circumstances may threaten objectivity. For example, self-interest threat, advocacy threat, familiarity threats, self-review threats, and intimidation threats. Safeguards can reduce such threats, but they cannot, totally remove it, and may be created either by external structures or by management, works environment. Now, these safeguards can be, by external structure, like, there could be a legislation, law, or there could be, legal guidelines applicable to that expert, or it could be by management. Internal policies, experts, internal policies, quality control policies, like that. But safeguards cannot eliminate all the threats to the management experts' objectivity. Threats such as intimidation threat may be of less significant to an expert engaged by the entity than to an expert employed by the entity. And the effectiveness of the safeguards of such quality control policies and procedures may be greater. Okay, because the threat to may be relevant to discuss with the management and that expert any interest and relationship that may create threats to the expert's objectivity, or like familiarity threat, or their self-interest threat, and any applicable safeguards, including any professional requirement that apply to that expert. And we are required to evaluate whether the safeguards are adequate, whether they remove or reduce the threats to an acceptable low level. Interest, like interest in relationship, like you can say financial interest, business, personal relationships, provision of other service, and that was there in the question itself. So the expert was appointed for last 5 years, okay, continuously. So since last 5 years, the expert is being appointed. So there is some familiarity threat. There is some, self-interest threat appearing to be. But how much it is, we need to understand by performing the inquiry with the management. We need to understand the objectivity. We need to understand what are the safeguards in the place, okay, to reduce the threat at the acceptable low level. Hence, okay, that audit team should evaluate the objectivity of the expert engaged by the entity, because the threat to objectivity created by being an employee of the entity will always present. An expert employed by the entity cannot ordinarily be regarded as more likely to be objective than other employees of the entity. As a result, audit partner is correct in this view. Clear? Any doubt? So in the current case, basically what is happening is he is reappointed for last 5 years. Okay, so there is a chance of familiarity threat, self-review threat, or you could not self-review but intimation threat, or some other threats, okay, which could be present in the current case, because we do not know. So to understand the impact of those threats, we need to inquire with the management. We need to understand the competency and objectivity of that expert. And then we need to see whether there are any safeguards. If yes, then to which extent these safeguards are reducing the threat, whether they are reducing till the level which is acceptable. If yes, then it is fine. If no, then we shouldn't be relying upon the work performed by the expert, because accordingly the work performed, it's not a work, or he will not be performing under independently, but he might be performing under some threat. So we need to gather more evidence, and it will be less reliable in that case. Clear? Any doubt? Any doubt? Okay. If no doubts, then let's move to the next question. Again, a good question, I'll say. Mr. Charan, while testing the manual journal entry posted into the company's ERP system, decided to draw samples from the manual journal entry listing provided by the management. As soon as Mr. Charan received the MS Excel based listing from the management by email, he performed the following procedure on the listing. He calculated the total number of manual journals in the list. He identified high value journals, journals posted on holidays, journal near to the period end, journals with round figures, or specified or below specified thresholds, and other relevant data analytics. Based on the analytical procedures, he picked up high risk journals and performed other relevant data analytics. Based on the data analytics, he picked high risk journal entries for testing and tested the same. He did not identify any observation, but audit partner denied to rely on the testing performed by Mr. Charan after reviewing his work paper. Now, what is the issue over here? What is the issue over here? Come on, guys. What is the issue we are looking over here? Why audit partner is not relying on the work performed by Mr. Charan? Is audit partner incorrect? Or Mr. Charan missed out something? What is the issue in this whole testing? There are two different essay which comes into the picture. What is the issue over here? Come on, guys. What is the issue over here? Okay, understand. Assuming that he has performed analytical procedures as per the relevant essay and all the things are compliant with respect to the analytical procedures. Now there is something important missed here. Okay, Tushar, can you explain further your answer? Something important being missed here. What is that? Okay. Uh, can you um, uh, can you explain further, Tushar? What is being missed here? Correct, Tushar? Correct. Good. Absolutely correct, with Tushar. Good. Come on, guys. I'm waiting for the answer. What is the issue here? If there is any, okay. It's not necessarily there is an issue, but if there is any, then what is the issue? Very important. This will enhance your understanding about few concepts that we will be discussing now. I would suggest try as much as you can. Think why, if there is any issue, then why. If not, then you could say that okay, audit partner is incorrect. The reason, see, you need to focus on everything in this question, like what is happening, what is the testing done, the data, source of the data, what is the conclusion, and then all the things. Okay, so in this case, in this particular case, I'll tell you the answer. Absolutely correct, Janvi. But there is one more thing I'll tell you on that. Okay. So in this case, there are two important things which I will talk about. One is SA 500 plus SA 530. Okay. That's the first, which talks about completeness and accuracy of the information / population being used for the testing. Now, in this case, Mr. Charan received the MS Excel based listing from the management by email. If I'm receiving something from management, I started performing the I received the information from management by email. It's an Excel file. He calculated total number of manual journals in the list. That is good. But what he did with that? Nothing. There is nothing other things mentioned over here. So he could have checked the completeness of the file first. It is necessary to check the completeness of the population before you draw the sample. That is a basic requirement of SF 530, that the population should be complete. And how can I check that? Either he can compare the listing received with the ERP output. Okay. He can compare the listing received from the ERP output. I can compare, okay, this is the listing I have received, this is the output of the ERP. Both are matching. The number of journal entries in manual journal entries in both systems or listing plus ERP is matching. Or plus accuracy. I could go and see, okay, for example, the total amount of MJE, manual journal entry, in listing and ERP is matching. So completeness, accuracy, I need to match. And for that, either I need to pull out the report by myself in the from the ERP, or I need to perform some additional procedures to understand the completeness and accuracy of the data. So additional procedures are required to validate the completeness and accuracy of the data that I have received from the management. I cannot directly accept. Now the thing is, if I directly accept and if I directly perform any audit sampling without verifying whether the population is complete or not, the outcome that there was no observation will not be reliable, because first step itself, I do not know whether my population is complete or not. Number two, whenever there is a system involved, in this case ERP is involved, I need to understand the controls around the system, that is ITGC controls, although it's a manual journal entry, still I want the ITGC controls, because there is an information or the report being prepared by a system. It's being extracted from the system, and I need some kind of controls around the system, okay, general controls, which can give me comfort that the data which is within the system with respect to the report is coming out, is the same data which is coming out. Okay. Although I cannot say that it's a fully automated control, it's a manual control, but in order to have some reliance upon the report which is extracted from the system, I need some reliance on the ITGC controls. Okay. So I need to test some ITGC controls. I need to see whether they are designed and operating effectively in order to get a comfort that the report which I have pulled from the system can be accurate. So when I talk about the additional procedures to ensure completeness and accuracy, that will include checking the ITGC controls around the system. Okay. And that is something you could say SA 315 plus 330 talks about that. Understanding the internal controls. Okay. And based on the understanding, I will test my internal controls as per SA 330. Clear? In this case, both of the things are not done. I have not verified the completeness and accuracy of the listing. Neither I have, anything done around the ITGC. So, also, I'm not sure whether the listing provided by the management by email. So, if you see the Excel listing provided by the management by email, whether I could verify that's the same report which is extracted from the system. It's an email. I received a file in email. I cannot accept that file. Okay. In that case, that population itself is not reliable. Hence, I cannot rely upon the testing being performed by Mr. Charan over the journal entries. Although he performed the risk analytical procedures to select high risk entries, but I'm not sure with the completeness itself or accuracy of the data of the population. Hence, it is not appropriate for me to rely on that. Clear? Any doubt? Any doubt? And I have also specified that no other procedures were performed on that listing except about 3 procedures. So it is clear that no procedures on the ITGC, completeness, accuracies, or any additional procedure was performed. Any doubt, guys? Any doubt? So there are options available here. Okay. So the options are when the auditor intends to use information produced by the entity for the audit purpose. In such a case, An effective test will not provide appropriate audit evidence to that extent. Taken with other audit evidence obtained or to be obtained will be sufficient for auditor purpose. That is incorrect because it says effective test will not provide. Hence, this is wrong. Second, an auditor may decide that it will be most appropriate to examine the entire population of the items that make up a class of transaction or account balance or a stratum within the population. So it's not talking about anything with respect to the completeness and accuracy. It's only talking about that, most appropriate to examine the entire population. That is incorrect. When using the information produced by the entity, the auditor shall evaluate whether the information is sufficiently reliable for the auditor purpose, including as necessary in the circumstances, obtaining audit evidence about the accuracy and completeness of the information. That is correct, that we are looking for. And D, obtaining audit evidence from different source or different nature may indicate an individual item of audit evidence is more reliable, such as when the audit evidence obtained from one source is different with the obtained from another. So why not D? Why not D? What is the issue with D? I know what the correct answer is C, but why D is wrong? Can someone tell me? What is the issue with D? Why D is incorrect? In statement itself, why D is incorrect? If I talk about this statement, why D is incorrect? I know it's not talking about completeness and accuracy. But other than that, what is the issue with that? Issue with D? Because D is not talking about completeness and accuracy. It's talking about something else. I know C is correct because it includes the accuracy and completeness. But in let's say, for example, if I give you this statement on a standalone basis, not related to any question, on a standalone basis, then you tell me what is wrong with this statement as such. Let's say you are looking this statement on a standalone basis and you have a question, okay, that based on this, kindly comment. Okay. Now, obtaining evidence from one different source or different nature may indicate that an individual item is more reliable, such as when audit evidence obtained from one source is different with the another. Kindly comment. So this is the question that you have received in exam. Let's say, for example, 5 marks or 4 marks. Standalone question, not linked with anything above. What is the issue in this? How will you answer this? Are you understanding my question? I'm saying, let's say this statement, standalone basis, you have received in the exam, that this is the statement and you have a kindly comment after that, not related to the above question that we are discussing now. You need to answer this. You need to comment upon this. Absolutely correct, Janvi. Good. Very good. Come on, guys. If you have this question for 4 marks in the exam, what you will write, what you will talk about. Come on. I'm waiting for your answers. I received only one answer here. I'll tell you. See, it is talking about relevance again. When I have evidence from different sources, source 1, source 2, or different nature. So it is saying that obtaining evidence from different sources of a different nature may indicate that item of audit evidence is more reliable. So if you have a different evidence from source 1 and source 2 which do not match, means, let's say for example, accounts receivable. Now from sales, you understood source 1 is your sales, let's say for example. Okay, from sales, you identified that, okay, when I looked from the sales perspective, I identified, okay, I'm selling goods, okay, to related party more. I'm selling goods to related party more. But when I looked from AR perspective, okay, when I was looking from the AR perspective, there was less outstanding to, or you could say reverse way. Okay, let me take it reverse way. So source 1 was inquiry with management. So management told us that 90% of sale is to unrelated party. Source 2 was sales register. That was showing that 75% of sale was to, let's say, related party. Source 3 was contract with related party, which was showing that related party should be only authorized dealer for company. Okay. Now, if you see the source 1 and source 2 contradict, there is a different nature. Okay. And there is a different information that is being obtained from source 1 and source 2 about the same subject matter. Hence, in this case, when there is a different nature or information about the same source, okay, about, sorry, the same subject matter, in that case, those informations become less reliable. I cannot either rely on this, I cannot rely on this if I have two different sources. But when I then compare the same with source 3, I could say yes, 2 and 3 are matching somewhat because the related party is the only authorized dealer for the company. Majority of the sale is with the related party. So 2 and 3 are matching. So that is more reliable. It increases the reliability compared to 1 and 2. And hence the sentence over here that obtaining audit evidence from different source or different nature may indicate that individual item of audit evidence is more reliable, which is incorrect. It shows that it is of less reliable. That when such audit evidence obtained from one source is different with the obtained from another. So that should be less reliable instead of more. That is the problem, and hence this is incorrect. Clear? It's all about reliability. That is coming from, again, SA 500. Clear? Any doubt? Any doubt? Okay. If no doubts, then let's take a quick 10-minute break and we'll gather back after the break. Okay, let's take a quick 10-minute break. So, hello everyone, welcome back. Let's continue the topic and the questions. Okay. So, there is one good question that let's cover. Mr. Akash decided to attend physical count of inventory going to be performed by the management. Kindly guide Mr. Akash with respect to the matters relevant in planning the attendance at physical count. Okay. Or in designing or performing the audit procedure pursuant to the requirement of 501. So you need to guide Mr. Akash with the matters that are relevant in planning the attendance of a physical inventory count. So what are the things that you will look into, okay, when you will be attending a physical inventory count or you are planning to attend a physical inventory count? So what are the matters that will be of relevance at that particular point in time? List certain matters. So list down those matters that could be of relevance. For example, nature of the inventory. If you are going to attend a physical count, then what kind of inventory you are going to look? Physical finished goods, work in progress, raw materials, let's say inventory which you cannot easily identify or count. So what is the nature of that inventory? One such example. Another example, as I date and timing of physical inventory count, when it is being conducted, what is the time, what is the date, something like that. So what are these matters, example of matters that could be important when you are planning attendance at a physical inventory count? Come on, guys. And after that, after this question, we have a very good case study sort of question that will enhance the knowledge again on these topics. What are these matters that will be of importance? Come on, guys. Correct, Tushar. Good. Correct, Janvi. Correct, absolutely correct. Okay, let us see the examples. So examples could include nature of inventory, as I told you, stage of completion of WIP. Okay, let's say for example, a company is engaged into the manufacturing of machineries. Now, if the machinery is 70% complete, you couldn't identify small screws or parts which are within the machinery. So you need to understand that, okay, you are going to, attend physical count of WIP, which are more than 70% complete. So it will be difficult to count the inventory's percentage. risk of material misstatement related to inventory, nature of internal control related to inventory, whether adequate procedures are expected to be established and proper instruction issued for physical counting, timing of the physical inventory counting, whether entity maintains perpetual inventory system, the location at which inventory is held, including the materiality of the inventory. Okay. Risk of material misstatement is different at different locations. Okay, because depending upon the attendance at those locations, whether the assistance of an auditor expert is needed. Let's say, for example, you are calculating the inventory, which is not easily calculatable. For example, petroleum, oil, natural gas, minerals. Okay, like for example, phosphorus, sodium, or something like that, which in their raw form are not easily can be calculated. Mercury, sort of like that. So these are certain matters which can help you to plan your physical count appropriately, and you need to consider that. Any doubt? Okay. If no doubt, then let's take next question, which is very important, and again a good question because it's a sort of a case study sort of thing. So pay attention to each and every detail. It's a comprehensive case study. So pay attention to each and every question or every detail in the question itself. Mr. Suhas was the audit manager for Malpensa Trading Limited. Okay, so he was the audit manager for Malpensa Trading Limited, which was involved in manufacturing of packed food items with a shelf life of 6 months. So the shelf life is 6 months and they are packed food items. While performing the audit, Mr. Suhas identified the majority of the inventory, okay, material to the financial statement as a whole, was lying with third party, that is Soho traders. So majority of the material was lying with third party. Majority of the inventory was lying with third party. Now that is Soho traders. Upon inquiry, it was identified that Soho traders was the sole proprietary concern of Mr. Ajit, that is the director's sons of Malpensa Trading Limited. So Soho traders was the proprietary of Mr. Ajit, and Mr. Ajit was the son of director of Malpensa Trading Limited. Okay, fine. Soho Trader was the sole authorized distributor for the company, and hence it was normal practice that the company followed, that is to keep the inventory at the godown maintained by the Soho traders. As per the company, this practice was followed with the other dealers also. Okay. Now, so this was a normal practice for the company to keep the material at the dealers godown. Normal practice that the company followed, that to keep the material at the godown maintained by the Soho traders, and it was a practice. Practice was followed with the other dealers also. Now, at the request of management and after providing details to confirm, Soho Trader issued a direct confirmation to Mr. Suhas, confirming the company's inventory lying with them and its perfect condition, not requiring any provision on them. So Mr. Soho Traders actually issued a direct confirmation to Mr. Suhas, confirming the company's inventory lying with them and its perfect condition. Mr. Suhas also performed the aging analysis procedure for the inventory and amount of receivable from Soho Traders to obtain more evidence with respect to the existence of inventory, which is given below. So that is something analysis he performed. Okay, aging analysis for the inventory and account receivable from Soho Traders, and accordingly he decided that no provision was created on the inventory and receivables. Okay. Now, after reviewing the audit work papers of Mr. Suhas, audit partners was unhappy and was not satisfied with the testing performed by Mr. Suhas. As per audit partner, external confirmation are not reliable. And hence, Mr. Suhas was supposed to perform other procedures. However, Mr. Suhas was having a different opinion. So, you need to guide Mr. Suhas with respect to the integrity and objectivity of the external confirmation received from third party. So, as per audit partner, external confirmations are not reliable, and hence Mr. Suhas was supposed to perform other procedures. So you tell me whether external confirmation in this case are reliable. Again, you need to focus on each and every detail of the question. Whether external confirmation in this case are reliable or not. So Soho Traders issued a direct confirmation to Suhas, confirming the company's account inventory lying with them and its perfect condition. Okay, good, Janvi. Come on, guys. Audit partner is saying that external confirmation is not reliable. So currently, Tushar, the question is on external confirmation. Whether external confirmation is reliable in this case or not. Come on, guys. Whether external confirmation is reliable in the current case or not. Although Soho Traders has directly issued a confirmation to Mr. Suhas. Come on, guys. If Tushar, can you reframe your answer? Bit, I need to understand more on that. I have received direct confirmation from Soho Traders. Mr. Suhas, the auditor, has received the direct confirmation from Soho Traders. So what is the issue over here? Why I can't rely on the external confirmation? Somewhere before we saw external evidence are more reliable. Somewhere before we saw that external confirmation and external evidence is more reliable than internal. Then why I'm not relying the external confirmation here? If not, if yes, then okay, why the partner is having a different opinion? Is he incorrect? So, Tushar, in this case also, Mr. Suhas first conducted inquiry with the management. Then they came to know about the Soho traders. That's the sole proprietary concern of Mr. Ajit. And then they provided all the details. Management provided all the details of Soho traders to Suhas. And then Soho traders issued a direct confirmation to Mr. Suhas. Let's assume it's a positive confirmation because saying that, confirming the company's inventory lying with them and it's perfect condition. So let's say it's a positive confirmation. So what is the option? What is the issue over here? We have everything good. It's an external confirmation, positive confirmation. We have the information that we received from the management. External evidence, more reliable than internal evidence. Then what is the observation here? What is the problem here? Come on, guys. I'm waiting for your answer. So what is the problem? Like, okay, focus on each and every item separately. We received the external confirmation. Good. External evidence more reliable than internal evidence. Good. We received the information. So related party was originally identified by management itself. So there was nothing that it was undisclosed related party. So related party was disclosed. That was good. Management provided all the details. That is good. Then where the problem lies? Even Soho traders directly sent the confirmation to Mr. Suhas. Okay, let us see the thing. Now, in this case, there is one line that we are not paying attention to, and that is this one. At the request of the management and after providing the details to confirm. This line has a very important role to play. Now, as per this line, what can you say about the confirmations? What can you conclude about the confirmations? The first requirement itself in a particular standard is not meeting due to this line. What is that requirement? How many of you gone through the previous lectures? Trust me. If you have gone through, then this particular line will, raise the case. Okay, no, this requirement we are talking about. Yes, Tushar. So at the request of management and after management provided the details to confirm. Management provided the details to confirm to Soho traders. Soho traders issued a direct confirmation to Mr. Suhas, confirming the company's inventory lying with them. What is the issue over here? Janvi, your answer is correct, but it is half. There is one more requirement that we are discussing over here. Okay, I'll give you another hint. SA 505. The first requirement of SA 505. What is that? The first requirement of SA 505. Nope. No Janvi. No Tushar. I'm talking about SA 505, not 510. No. Physical inventory checking, SA 501, special items. Not 505. Okay. The first requirement of SA 505 when we are using external confirmations, it says that when using external confirmation procedures, the auditor shall maintain the control over confirmation request. That is, he is the one who should determine the information to be confirmed, not the management. Here, the details are provided by the management to Soho traders to confirm. Means the auditor was not having control over the confirmation, external confirmations, hence that makes them unreliable. It's not about the party of Soho traders. It's about the control that is required to be maintained on the external confirmation procedure. So it's about the process. It's not about the party. So let us see the answer. As per SA 501 audit evidence, specific consideration for selected items, when inventory is under the custody and control of third party, it is material to the financial statement, then the auditor shall obtain sufficient and appropriate audit evidence regarding the existence and condition of inventory by performing one or both of the following: request confirmation, perform inspection and other audit procedures. Now, depending upon the circumstance, for example, where the information obtained that raises doubt about the integrity and objectivity of the third party, the auditor may consider it to appropriate to perform other procedures instead of or in addition to the confirmation with third party. Okay. Now, this paragraph is important as of now. I'll park it on side. Okay. Because I will be asking one question on this. I'll park it inside because there will be one question on this at the later point in time. As per SA 505 external confirmations, audit evidence is more reliable when it is obtained from the independent source outside the entity. That is true. Maintain control over the confirmation request. That was something missing in the current case. Okay, in the current case, at the request of the management, after providing the details to confirm, Soho trader issued a direct confirmation to Mr. Suhas, confirming the company's inventory lying with them and its perfect condition and not requiring any provision. Hence, Mr. Suhas does not exercise external confirmation control over exercise confirmation request, as he did not determine the information to be confirmed or requested from Soho traders. As a result, confirmation received cannot be considered reliable. Clear? Where was the issue? Understood? It was the requirement of SA 505 that I need to have control over external confirmations. And SA 501 says that you need to look for the confirmations, request confirmation and perform other procedures. And to request confirmation, I went to 505, but I forgot to exercise, I was not able to exercise the control, and hence it's not of no use now. Clear? Any doubt? Okay. If no doubt, you need to guide Mr. Suhas, okay, with respect to the factors to consider while designing a confirmation. So let's say you are the auditor instead of Mr. Suhas. What are the factors you will consider when you want to design a confirmation? I'll give you some examples. For what assertion you are drafting a confirmation, what comfort you are looking for. One could be that area. One could be method of communication. So which are the factors that you are required to consider when you are designing a confirmation process? What are those factors that could be important when you are designing a confirmation process? Come on, guys. Hello, everyone. Sorry, actually there was some network issue. So let's continue the question that we were discussing with respect to the factors that are required to be considered when designing the confirmation process. Okay. One is approval from management. Number two, yeah, very good answer, Tushar. So good, Janvi. So let us see the answer. Okay, so these are certain factors that we need to consider when we are designing the confirmation process. Okay, the assertions that are being addressed, like for example, what comfort we need. It could be, let's say, for example, I need comfort on valuation, completeness, accuracy, or etc. So accordingly, whatever comfort I need, I'll design my external confirmation accordingly. Okay. Then specific identified risk of material misstatement. Okay, including fraud risk, if any. The layout and presentation of confirmation request. Prior experience on the audit or similar engagement. The method of communication. Again, very important. Management authorization or encouragement to confirming parties to respond to the auditor, whether management is supportive or not. Because at times it becomes, management might not be supportive and it becomes difficult for you to confirm the balances or get the external confirmation responses. Confirming parties may only be willing to respond if a confirmation request containing management authorization. What if you are not getting management authorization? Management is refusing to confirm. Could be a problem. Ability or of the intended confirm party to confirm or provide the requested information. For example, whether the party can provide the detailed information or whether he can just confirm the total balance. What is the position of that individual party with respect to the detail that he could confirm? These are certain things that could be considered while designing a confirmation process. Okay. Let's say, for example, okay, I told you there is one paragraph I'll keep aside. This one. Therein, I discussed that depending upon the circumstances where the information obtained raises doubt about the integrity and objectivity of the third party, auditor may consider to appropriate to perform other audit procedures. To perform other audit procedures instead or in addition to the confirmation with third party. Now you guide me, which are these other audit procedures that you could perform? Okay, that is a question that we are going to discuss now. That what are the other procedures in addition to the confirmation with the third party that can be performed when inventory confirmation obtained raises doubt about the integrity and objectivity of the third party. So when there is an issue with the objectivity and the integrity of the third party, or I cannot rely on the confirmation because of any reason, what are the other procedures I can perform to get the confirmation or comfort over the inventory which is lying with the third party? What could I do in this case? Can you give some examples of the procedures that I can perform? Come on, guys. So what could be the example of other procedures? Janvi, bit generic, and some of them will not be applicable here. I want specific procedures. Let's say you are in the place of that auditor. You cannot rely on the confirmation because you forgot to exercise control on that. You were not able to exercise control on that. Now that confirmation becomes unreliable. What you will do to confirm the inventory? I want specific answer, not the generic ones like observation, recalculation, inspection. No, not the generic ones. Specific. What activities you could do? Although your answer will be around these areas only, like observation, recalculation, but specific. What you will observe, what you will recalculate, what you will inspect, what you will inquiry, what will you perform, what procedures you will perform in detail. Come on, guys. Assume that you are on the place of that auditor. Assume that you are on place of that auditor. What procedures you will perform? See, your procedures will lie around these areas only. Good, Jagvi. Good. Good. I received one answer. I'm waiting for others. Think that you are on the place of that particular auditor. So, let's say, for example, as I received an answer earlier that we'll be observing, inspecting, and recalculating, inquiring, reperforming. But what areas in that is very important. Let's say, for example, observation. I might involve myself into observing the physical count performed by the third party. Recalculation. I might perform recalculation over the inventory issued to the third party, and then subsequent you can say the inventory return back, and some recalculations on the inventory records to understand, okay, what is the inventory lying with them. Inspection. I may ask third party to perform an inspection. I may go over there, I inspect the inventory of which is lying with the third party. So I may request the third party to allow me to inspect the inventory, or allow any third auditor which which I may rely upon, okay, which is not related, but a third auditor to inspect the inventory on my behalf. Okay. Reperformance. I may reperform the count that is performed by the management by the third party during at that particular point in time. Other analytical procedures. I may inspect the documents like warehouse receipts or something like that if it is kept in the warehouse, third party warehouse. Okay. So that way I will perform certain procedures which are around observation, inspection, recalculation, reperformance, inquiry, analytical procedures, but in detail, these will be the procedure. Let's see the example. First, attending or arranging for another auditor to attend the third-party physical count of inventory is practicable. So it's something like observation, obtaining another auditor's report or service or auditor's report on the adequacy of the third party's internal control for ensuring that the inventory is properly counted and adequately safeguarded. Inspecting the documents regarding the inventory held by third parties, for example, warehouse receipts. Requesting a confirmation from other parties when the inventory has been pledged as collateral. So these are some other procedures I can perform, okay, when I have less reliance on the external confirmation. Now, another good question in connection with that only. Let's say, for example, instead of management, Mr. Sohar sent the confirmation by exercising the necessary control over the process and received the response from Soho traders. Okay, in that case, could the confirmation received be relied upon? Now, let's say, for example, in this question itself, okay, instead of management, Mr. Sohar sends Sohar exercise the control, send the confirmation, receive the confirmation, same confirmation that okay, company's inventory lying with them is in perfect condition and does not require any provision. So in that case, would it be, can we rely upon the confirmation? Can we rely upon the confirmation or not? So I, as a Mr. Suhas, as an auditor, exercised all the control necessary on the confirmation process as per SA 505 to send the confirmation. I received a positive response. He confirmed the inventory, it is perfect condition. Can I still rely on the confirmation? Now can I rely on the confirmation? Come on, guys. Very important. Come on, guys. Whether I can rely now on the confirmation. Now I have done everything. I relied upon. I have exercised the control on the confirmation. I received a positive response. Okay. Everything is fine. Earlier, the issue was that, okay, it was at the management request. Now it is, let's say, for example, assuming everything is good. I send the confirmation. They replied back, everything is fine. Can I rely upon that confirmation? If we are talking about objectivity, then I need the reason. Okay. Only being a related party could not, conclude that I cannot conclude on being a related party that the objectivity is missing. Trust me. If I have to conclude that the objectivity is missing, I need to have some other audit evidence. Just because it's a related party, I cannot say that. So, can I rely now on the confirmation or not? Come on, guys. If yes, I can rely on the confirmation, then why? It would be the reason that, okay, now I have exercised the control. It's an external confirmation. I shared the data which was confirmed by the third party, although being a related party, but it was confirmed by the third party. External evidence is more reliable than internal evidence. It is a direct received evidence, not the indirect or inference one. So based on that, it could be, I can rely. If not, then why not? If I say objectivity is missing, why objectivity is missing? Where objectivity is missing? Just because it's a related party, I cannot say the objectivity is missing. Come on, guys. Everything is here only. We have already discussed everything. What could be the issue here, if there is any? Can I rely on the confirmation or not? Assuming that audit team was in control of the process, they decided which information to confirm, and Soho traders sent a direct confirmation then to auditors confirming the inventory and its perfect condition. think what each and everything that we have discussed till now? Come on, guys, I'm waiting for answer. I'm waiting for the answer, guys. So can I rely upon the confirmation now or not? Very important to understand the concept reason, because this will guide you, this will enhance your understanding about these confirmations, audit evidence, related party concepts. Trust me. Okay. I'll request again to read the question once. I'll request you to read the question once and then think in detail once again whether I can rely upon the confirmation that I have received, even though I have exercised full control on the confirmation. Okay. So, in which area the company is working into, trading into? Company is trading into packed foods which have a shelf life of 6 months. Okay, good, very good. When Mr. Mr. Soho Trader is confirming, they are saying it's in perfect conditions. Good, no issue. When the aging and inventory aging and receivable analysis was performed, it was identified that there was an inventory amounts in lag more than 90 days, and more than 90 days was lying with the Soho traders. So this is the amount that is lying with the Soho traders, is of more than 90 days. Inventory amount. Okay. Let's say, for example, hypothetically, I'll remove the 90 days. I'll keep it more than 180 only, because the packed food have a shelf life of at least 180 days. Let's say, assume this, I'll remove this. Still, there is a material amount of inventory more than 6 months lying with third party. And third party, that is Soho traders, is saying you that it does not require any provision on them because it's in perfect condition. How it could be possible? Inventory cannot be in good condition because itself a shelf life only 6 months. I have an inventory aging available which says that 180 days or more. I have almost near to 2 CR, not 2, even more than that, 3 CR of inventory lying with Soho traders, and he's saying that no provision is required. So I have a contrary information or evidence available to me, which creates a doubt about the confirmation provided by Mr. Ajit, that is Soho traders. So you have an information from two different sources that we were talking about earlier that do not match. That's why purposely I discussed that particular topic. I discussed that particular line because that was supposed to come now. So we have two informations contradicting to each other. Now that makes one information less reliable. Either the inventory aging is wrong, either the confirmation that is provided by Mr. Ajit from Soho Traders is not correct. Okay, so that reduces the reliability of the information. In that case, I cannot rely upon the confirmation provided by the Soho Traders. It's the question of the reliability because of the other information available to me, which I have gathered from different audit source, different audit procedure, which is in front of me, which says that the yes, provision on the inventory is required because I have a non-moving inventory, or you can say expired inventory near to what is the amount of my expired inventory? $298.4 lakhs out of the total inventory which is lying with of 404.4 404.3. So if I talk about 298.4 by 404.3, almost 73% of the inventory, almost 73% of the inventory lying with Soho Traders is expired, of no use, which is required to be written off. Can you imagine the impact of inventory on my books of account and on the confirmation? Hence, I cannot rely on the confirmation for sure. Let us see the answer. As per SA 501, depending on the circumstances, for example, where the information obtained raises the doubt about the integrity and objectivity of the third party, the auditor may consider it appropriate to form other audit procedures instead of or in addition to the confirmation with third party. Now, why I have an issue with objectivity and integrity? Because I have a different audit evidence. Not because it's a related party, but I have a different audit evidence available in front of me. As per SA 505, if auditor identifies factors that gives rise about the reliability of the response to a confirmation request, the auditor shall obtain further audit evidence to resolve doubts. If auditor determines that the response to a confirmation request is not reliable, the auditor shall evaluate the implication on the assessment of the relevant risk of material misstatement, including the risk of fraud and the related nature, timing, and extent of other audit procedures. Very, very important. If I decide I have a doubt about the reliability of the response, then I need to resolve the doubts. If I feel that okay, confirmation cannot be relied upon, then I need to consider the impact of that on my risk assessment, even risk of fraud, and I need to see what changes I need to make into the nature, timing, and extent of other audit procedures. As per SA 330 and 550, an auditor shall design and perform further audit procedures to obtain sufficient and appropriate audit evidence about the assessed risk of material misstatement associated with the related party relationship and transactions. Although there is an integrity issue, but I'll also see from the related party transaction side, because when there is a related party transaction, there could be a chance of fraud also, and I do have information available, some contrary information available with me. Hence, in the current scenario, Mr. Suhas should have performed other audit procedures to validate the inventory lying with Soho Trader. I cannot rely on the confirmation. Clear? Any doubt? Any doubt? Okay. There is one more question that I want to cover. Very good question. In continuation to this only, because it is related to this whole case study. Okay. Now, in continuation of the above question, Mr. Suhas, after inquiry with the management, analyzed the balance outstanding with other authorized dealers, which is given below. So this is the balance with other authorized dealers. Kindly guide Mr. Suhat with respect to the evaluating assertions that the related party transactions were concluded on the terms equivalent to those prevailing in the arm's length transaction. Okay, let's say what we are required to do here is we are required that we need to evaluate the assertion that the related party transactions were considered on terms equivalent to those prevailing in arm's length transaction. And why so? Reason because management was saying that this practice was followed with other dealers also. That it's a normal practice to keep the balance of inventory, to keep the AR with them, having that much AR. It's a normal practice with them. So this is the AR balance of Soho traders, and auditor has identified some other AR also which are there. So you need to guide Mr. Suhas with respect to evaluating the assertions that the related party transactions were conducted on arm's length price. So how will you evaluate that? And what is the requirement as per SA, let's say for example, SA 550. Okay, what is the requirement of SA 550 with respect to the arm's length price transaction or assertions on that? There is a requirement in SA 550 with respect to the evaluating the assertions of the related party transactions that were conducted on equivalent terms to those prevailing in arm's length transaction. So what are those requirements of SA 550? Are you getting my question? So the question is, there is a requirement in SA 550 with respect to assessing a related party transaction on arm's length price. Okay, you have the information here. AR balance of other authorized dealers. You have AR balance of Soho traders. Now you tell me first, what is the requirement of SA 550? Number two, whether this transaction appears to be on arm's length price or on terms equivalent to those prevailing in the arm's length transaction. So do you think this the dealership that Soho trader is having is conducted on terms equivalent to those prevailing in arm's length transaction? So do you think these are conducted on terms that are equivalent to those prevailing in the arm's length transactions or not? If not, then again, what is the requirement of SA 550 with respect to that? Absolutely correct, Janvi. So this is a table for the authorized dealers other than Soho. This is a table for Soho. This is the AR balance. This is the aging. Here we have AR balance and some aging, like the oldest outstanding AR. See, it's a apparent difference. I don't have any AR aged more than 8 months here, and that too maximum exposure of 14 lakhs, where they have either very less inventory. And when I could see AR and inventory with Soho, inventory is 404 lakhs. AR again high AR with an aging goes to up to 5 years. Still no provision was created on inventory or receivable. Means that is not on the terms which are equivalent to arm's length transaction. That is for sure. I could say that okay, these transactions are not conducted on terms equivalent to those prevailing in arm's length transaction. Now the question arises, what is the requirement of SA 550 then? So SA 5, let's see. SA 550 related parties, when management has made an assertion in the financial statement to the effect that the related party transactions were conducted on terms equivalent to those prevailing in arm's length transaction, the auditor shall obtain sufficient and appropriate audit evidence about the assertion. Although the audit evidence may be readily available regarding how the price of related party transaction compares to similar arm's length transaction, there are ordinarily practical difficulties that limit the auditor's ability to obtain audit evidence that all other aspects of the transaction are equivalent to those of arm's length transaction. This way, like credit terms, keeping so much aged inventory with them. For example, although auditor may be able to confirm that the related party has conducted at market price, related party transactions have been conducted at market price, it may be impracticable to confirm whether other terms and conditions of the transaction, such as credit terms, contingencies, specific charges, are equivalent to those what would ordinarily be agreed between independent parties, which we could see it's not the same. Accordingly, there may be a risk management assertion that a related party transaction was conducted on terms equivalent to those prevailing in arm's length transaction may be materially misstated. So management told above, here the management was saying that's a normal practice. So management said that okay, this is a normal practice followed with the other dealers also. Okay, but we couldn't see this practice which is being followed with other dealers. So the management contention is not appropriate in the case. Number two, as per SA 550, even okay, management is responsible for substantiation of an assertion that a related party transaction was conducted on terms equivalent to those, like arm's length transaction. Means management needs you to provide the detail if they are making the assertion that okay, it was conducted on similar terms, and what details they are required to provide comparing the terms of related party transaction, those two and unrelated parties, engaging an external expert to determine market value and to confirm market terms. Okay, comparing the terms of the transaction to known market terms. Okay, for broadly similar transaction to an open market. So these could be the things that management can provide you. But as an auditor, what we are required to do to evaluate the management support for this assertion, what auditor could do is consider the appropriateness of the management process for supporting the assertion, verify the source of internal and external data supporting the assertion, and test the data determining their accuracy, completeness, and relevance. Evaluate the reasonableness and significant assumptions on which the assertion is based. And which assertion? Assertion that the transactions are on the similar terms which are there for the other non-related party. Clear? So this is could be the done. Okay. So this could be the thing that the auditor can do to evaluate assertion that the related party transactions were conducted on terms equivalent to those prevailing in arm's length transaction. Clear? Any doubt with respect to this? Any doubt? Any doubt, guys? Okay. So if no further doubts, then before next class, I request everyone to go through previous lectures, to read the study material, come up with your questions, okay? And then in next lecture also, we will be continuing SA 500 series. We will be discussing the questions on SA 500 series, various questions, so that we can enhance your understanding about the topic. I hope you like the today's lecture, the questions that we discussed, and it has enhanced your understanding. If you need anything further, you can give your feedback, okay, on the viewers portal. You can provide your feedback that what additional you need, okay, and accordingly we will, if possible, we will provide you. Okay, guys. Thank you for participating. Thank you for watching the lecture. See you in the next lecture. Thank you.